Solana was a lot faster and better than ETH, and it had a community. Now, that next 100x improvement where Sol was to ETH, now what is that to Sol?
To answer it shortly, I don't believe there's a 100x improvement. The industry is rapidly coalescing around the high throughput architecture. It will be a almost continuous streaming of blocks to the point that the block time is so short that it's only limited by the speed of light through fiber around the earth. If you're building a game that you want to have global scale, perhaps it's better to just be a completely public financial infrastructure that it runs on.
If thinking about this, like if you really like to farm gold in WoW, but you didn't like to grind levels on RuneScape, you could maybe have to like, hey, I'll give you 1k WoW gold if you grind me 10 levels on this RuneScape skill. And that would be best done on an asset ledger because you could, hypothetically tokenize things from different games and trade them.
So it's about breaking down these barriers and these silos, connecting these silos as opposed to creating more silos, in my opinion. Like, again, we don't want to recreate the fragmented, opaque system that exists in the real world. We want to build a new financial system. And I think that's really the promise of crypto. I think DePIN is actually one of the most profoundly exciting innovations in how capital is raised and bootstrapped since like stocks or the LLC. The way infrastructure projects typically get financed is there's a large centralized entity that raises a bunch of equity or puts in their own money. But I think the true product of crypto is actually coordination and incentive alignment. Because if you can enable shared ownership and incentive alignment through a token, in the case of DePIN, it allows you to align incentives of the operators and the users of the network with sort of the creators of the network. And it allows you to shift capital expenditures to operational expenditures. So you don't have to invest a big amount, or you don't have to go to banks or raise a bond. You can just bootstrap it yourself. And I think that's a very profound advancement in how we fundraise and actually bootstrap these projects. And I think DePIN generally, when the sun sets on the sector, DePIN will be one of the most profound verticals to come out of this.
All right. Hello, everyone. I'm your host, Nicholas Wenzel. And today we have Diego Perez de Ayala from Frictionless. He's co-founder and managing partner at Frictionless Capital. He's also the co-founder of Monkey DAO. Those of you who are around in 2021 on Solana, you know that DAO, and they're the most influential one in that time span. And so, Diego, it's really a pleasure to have you here.
Thanks for having me, Nicholas. I'm excited to be here.
Oh, yeah. All right. So, first of all, I got to say thank you because in 2022 and 2023 in the bear market, you're one of the few people who are still bullish on Solana. And seeing your tweets, among others, really still gave me hope because after the NFT days, I didn't see much hope there. And I didn't really understand Solana too well. But seeing you guys still be positive about it, you and Logan and others, and then hearing Logan's podcasts about it and going deeper into it, really helped me to formulate a thesis around Solana still having potential. And I bought a lot of it in 2023, and that was really helpful, and it let me do this podcast today and focus more of my time on crypto. So I want to say thank you for that. You were instrumental in that trade, and I think you helped a lot of other people still have hope in Solana during those dark times.
Yeah, no worries. Appreciate your kind words. And I think what really came across in that time period was our conviction and the thesis we had formed in the 2021 to 22 period, and just really doubling down with extreme conviction and during that time frame. And really when Solana price and fundamentals we felt were most dislocated, that's when we started the fund, and that's when we bet big.
Yeah, what a fantastic time to start the fund. Was it hard at all to raise in that macro environment with rates being so high, and was that difficult?
Yeah, it was very difficult. I think it was one of the worst fundraising periods on record for companies as well as managers. For first-time managers in particular, it was a very, very difficult time. We were first-time managers with a contrarian thesis, which is double cross. However, I think what really came across in our time sort of raising was a lot of early conversations, and we remained remarkably consistent throughout the period. We never flip-flopped. we never wavered in what we said was going to happen. So it was really a case of just the market validating our thesis in the months and year that followed since we started raising. And then fortunately we were able to raise a $20 million fund. So that was really the beginning of it. But now we're in the midst of deploying.
Nice. Yeah, congrats on that raise. That's awesome. And I know you recently raised again, right? You want to go into that really quick a little bit?
Yeah, it's all just the same vehicle, Frictionless One. So we raised 20 million at the beginning of this year. We did our final close, and really the thesis for the fund more broadly, if I'm just taking a step back, is more around essentially high throughput. So what are the new things that are unlocked when you go from systems and networks that do kilobytes per second, like Bitcoin, to sort of megabytes and then gigabytes per second, which is where we're headed, right? And I think the analogy I use, which is somewhat crude, but it's effective, is essentially like the early days of the internet. What happens when you go from dial-up to broadband and then fiber optic? And the short answer is you get a lot better apps, right? In the same way that YouTube wasn't able to be done on 56K modems, you can't do 4K gaming and real-time live streaming in 1440p on broadband, right? So it's sort of like every time the infra has a jump in performance, which in the case of high throughput networks was just the bigger blocks faster, as well as the parallel transaction execution and the parallel VM. Those are the sort of two key unlocks. This is what's enabling dramatically better UX and new types of applications that we're uniquely focused on in the fund.
Exactly. Yeah, that's what's so exciting to me as well. And so that's why I'm really happy to have you. The things that are unlocked now, the types of apps that can come out in the next 3 to 5 years, I think are completely different to what we saw from 2017 onward, And speaking of that, one of the things you said, when we went from dial-up to broadband, now we can have gaming on PCs, and that, a lot of gamers now, that's their favorite thing to do on the internet, and you are one of those people. You really liked, I'm not sure if you still like to, but you previously in an interview in August 2024, you said that you've been terminally online since you were 10 and you really loved MMOs.
Yeah, that's correct. That's actually how I did my first crypto transaction. I sold some WoW gold for Bitcoin.
That's awesome. And so when you played WoW, what was your favorite activity? Would you raid? Would you PvP?
Honestly, I would do a lot of stuff on the auction house. So maybe relates to crypto and finance. Ended up working in investment banking. So I think it sort of like naturally flowed into that. It was definitely the money-making aspect and sort of like understanding idiosyncrasies in the market, right? Like, for example, if I farm this resource and I convert it in this stage of the value chain, right, and convert it into a partially finished good, does that give me a better margin than a fully finished good or selling the raw material? Sort of these little arbs and stuff. I would spend all day on that. Look, pretty awesome. nerdy stuff, honestly.
Yeah, and I'm curious, how did that prepare you much for the 2021 NFT craze that happened? That whole arbing and seeing what other people needed or wanted in.
I think the biggest thing was just understanding how internet natives communicate and interact, like in a guild, for example, like a WoW guild. Very similar to MonkeyDAO, right? It's all a question of incentives. There's a group of people all over the world. People value different things. They want to get different things out of the participation. Some people are there for fun and entertainment. Others want to learn and really push themselves to the limit and sort of push the performance and push the boundary. Others just want to hang out and want someone to talk to. They want the companionship, and there's a loneliness epidemic in the world, as you know. So it's sort of like some of those idiosyncrasies that helped me understand the incentives of different people on the internet, including crypto retail, which is a very particular subset of technology retail. Some of the most valuable per capita users in the world, but a very specific audience that you have to speak to in a very specific way.
Yeah, so true. That 2021 NFT craze was a wild, wild time. You mentioned in that August interview that you did in August 2024 that the thing that brought the first transaction that most people did on Solana was an NFT mint or transaction, and I was the same way. I thought it was like a scam chain, centralized. I thought it was too good to be true that it was so fast, and cheap to mint something. I thought, okay, it's a scam chain, but I'm here to gamble on some NFTs, so let me try it out. Yeah. And I remember trying to mint a Thugbirds like in the middle of the night, and that was crazy. And I always felt like I was on the outside looking in, but you were one of these big people who I'm finally glad to sit down and talk to, or I'd see you tweet and it seemed like you had everything figured out. I'm curious what that growth journey was like. When you first started, did you anticipate your account would grow that much? Just tell me a little bit about that first, like going from 0 to 100K people following you.
Sure. Yeah, absolutely. So, I mean, I had never used Twitter before. A lot of people think of me as like a KOL or someone who had a plan and, sat in their basement and it was all like sort of premeditated, but it really wasn't like that at all. When I got involved on Solana, it was very early days. It was before Metaplex. There was a couple dozen companies, applications and protocols, period, right? There was early companies like obviously like Radium, Serum, a couple wallets, there was AMMs, there were a couple marketplaces for NFTs. There was just one actually, Solana Art. So it was a very early time. I would say like at that point in time, Solana was a chain that was still very much like a very small community of people, a couple thousand people in total. There's a Discord where people would hang out, validators. There was different sub-communities, mainly just people who were building stuff or had questions around smart contract, being a smart contract developer around Anchor and stuff like that and Rust. But there really wasn't a cohesive vibe and feeling at all. So one of the first things I did was get into a Discord with some of my friends following the Solana Monkey Business Mint. And we just started comparing notes and eventually what became MonkeyDAO. So I think like in my journey, I haven't been very forceful about it. I pretty much just created a Twitter account and started sharing my takes on Solana, on the industry, on investing, on finance. And eventually what I realized is that there's people out there that find these insights valuable and they will press the follow button and they'll tell their friends about it. It's sort of like the analogy I use is like if you have a lighthouse and you shine it into the night, some boat is going to see it and come into the harbor, right? And content is a very, very much the same way. It's a very scalable, replayable, high leverage activity that really scales over time. Like this is why some of the smartest people in the world, they do things like podcasts or newsletters, because one tweet, and I've said this before, like I stand by the statement, one tweet can change your life if it gets shared or replied by a large account or picked up. So I think it's very much a combination of just putting your honest takes out there in an unfiltered fashion, not trying to be someone that you aren't, and also just realizing that, you have nothing to lose. People will forget your bad tweets. They'll only remember the good ones. And it's something that everyone should do. They should write 5 or 10 tweets a day.
I love that because I'm actually pretty nervous about writing bad tweets and being like sharing information that people don't find valuable. But it doesn't sound like you were worried at all. You were just like tweeting what came to mind and kind of just like shooting from the hip. Would you say that's not accurate?
It was just like a constant stream of consciousness. I think especially when I met Logan, I came to a pretty good understanding of the Solana thesis and the high-throughput thesis and as to why it was going to win. So I was very high conviction on the high-throughput architecture. I thought that was a requirement. It seemed obvious to me at the time, which I think even today in late 2024, it's not consensus yet. So we were pretty early, like 3 years later.
Yeah.
But I think generally it's sort of like going back to what I said, right? I understood the psychology of people on the internet super well. And I knew people were there to make money and find the best projects, to make friends and to sort of have a sense of belonging. And I knew they were there to have fun and get entertainment. So my tweets were pretty much a mix of those three things.
Did you spend a lot of time on Twitter? Because I spend like 2 to 4 hours a day, 4 to 5 if I can get my way. But like, just scrolling Twitter, and I mostly lurk. But it felt like you were on Twitter a lot back then. I remember seeing your tweets all the time.
Yeah, I was on Twitter probably at least 10 hours a day. It was a
Whoa,
very
10.
yeah, it was a very like intense period of my life. Like I was at one point tweeting over 50 times a day.
Nice.
Yeah.
That's really good. Next time my girlfriend asks me why I'm on Twitter for 4 hours, I say, babe, it's not enough. I gotta go to 10.
I mean, I think it's kind of like the collective hive mind of the industry, right? It's sort of like something that I found really interesting is when I talked to one of my friends in Florida. He's deeply involved in the biotech sector and researching new molecules and new drugs and, research studies and sort of like cutting edge stuff in biotech, like frontier tech. And he mentioned to me there's also essentially a crypto Twitter for pharma, a parallel industry where people discuss the latest molecules and studies, even in advance of like public knowledge. And I wouldn't say it's private information, but I would say the most high level discussions at least in the public sphere are happening on Twitter, even for those sectors. So it's quite interesting.
That's fascinating. Yeah, I feel so fortunate that I get to be someone who no one knows and just stand there and basically it's almost like I'm in a conference room listening to all these people talk about stuff and it's almost like learning a language being on crypto Twitter for long enough. There's all these terms you don't know, but now after 3+ years of lurking constantly, like I understand the language that everyone's talking about. It's cool.
Very interesting.
Yeah. And so, yeah, Frictionless is really focused on high throughput chains as like an important building block. And that is informing your opinions about the kind of apps that we'll get. And so you're focused on both infrastructure and applications at Frictionless. Is that right?
Correct. Yeah. I would say for the first 2 years of the firm, we were quite focused on infrastructure. There was a lot of alpha in the liquid markets and just being able to buy coins at depressed valuations for networks that we knew could scale and that could actually support billions of dollars of trading per day and like hundreds of millions of transactions. But eventually, obviously, the market catches up, right? And some of those things begin to get priced in. And then the good thing about sort of the industry is if you have a deep understanding of the infrastructure, it makes you ideally positioned to move up the stack and actually look at apps. And I think what you see is a lot of investors that don't have a deeply formed thesis on the infrastructure. They sort of like pick a bunch of categories and they say we're investors in consumer or we're investors in payments or gaming or social. Like they throw these terms and these narratives and themes around. But it's not in my opinion, it's not a way to allocate, because what that does is it creates the opportunity for you to back the right company on the wrong chain, which is, and going back to the internet example, analogous to backing like the king of dial-up. Mm-hmm. Do you want to back the king of dial-up when broadband and fiber optic exists? Like I would say no, right?
No. Yeah. Like backing Blockbuster when Netflix is about to come out and stream everything.
Right. Or being the last investor into MySpace when Facebook exists, right? It's a similar thing. Like technology is an iterative process, and it's very rare in technology that you would actually create the end state of a product or an innovation in the first iteration, right? It almost never happens. It takes a couple iterations, and there's typically unsurmountable tech debt as part of that initial architecture and design that, a new entrant realizes there's a couple things missing, switches things around, and is more nimble and eventually competes away the original incumbent. And I think you've seen this like time and time again, right? In personal computing, printing, automobiles, trains, like any sort of profound technology, you've seen this again and again. We don't believe blockchains are any different.
Yeah, and on that note, when I used Solana in 2021, I had previously tried to do something on ETH, and then I got the gas cost of like $200 to mint this NFT, and I was like, okay, no. So then I went to Polygon, and I tried that, and I was like, oh, this is cheap, this is great, and then I tried Solana, and it was like the same to me. Polygon had no community, but it was a lot faster and better than ETH. Solana was a lot faster and better than ETH, and it had a community. Now that Solana is so performant and has such a huge community and distribution and so many things built on top of it, that next 100x improvement where Sol was to ETH, now what is that to Sol? I see a lot of people speculating that it's Sui, that it's Aptos, that it's Monad. People hope that they can recreate that Solana trade. That was so obvious if you used ETH and you used Solana. They hope that they can recreate that trade. Do you see any potential where it is that same 100x or even 10x improvement?
It's a great question. To answer it shortly, I don't believe there's a 100x improvement. I think the industry is rapidly coalescing around the high throughput architecture. Then the blockchains of tomorrow will be massively parallelized, and they will have big blocks fast. It will be a almost continuous streaming of blocks to the point that the block time is so short that it's only limited by the speed of light through fiber around the earth, right? So if you get to multiple concurrent proposers, which is something that several blockchains, high throughput chains have already implemented, and Solana will implement on the roadmap, I think that's sort of the end state. That's probably the next big unlock after high throughput and parallel VM. But to answer your question, I don't believe there's 100x, but I do think there are always things that can be improved and optimized, both on the hardware side as well as the software. So it's sort of like, can it get faster? Yes, it can. I mean, these systems scale with hardware like core count, and they scale with bandwidth. So that will naturally get faster. But I think it's also the order in which these things get shipped, right? So if there's a set of generally accepted best practices for a high throughput performance system, it's not just like, who does them. It's like basically who does what first. And there's some like fine tuning and optimization. I think that can lead to some interesting outcomes. But I think the broader discussion is also interesting because if you look at crypto today, there's not a lot of adoption anywhere in the grand scheme of things. Like if you compare 4.5 billion internet users to crypto is quite literally a drop in the ocean. So a lot of people ask me, has Solana won? I would say Solana is maybe like on the 2-yard line and everyone else is like on the 1-yard line. Like today it's doing well, but the race is not finished by any means, right? If you told me Solana had, 1 billion concurrent active daily users and it had trillions of dollars of economic value secured immutably on the network, then I'd say, okay, yeah, like this is going to be pretty hard to negotiate. But we're not even close to those numbers, right? So I think the race is just starting.
On that note, what types of applications do you see would be driving that the most? Like, so far, when I ask most people what they think has PMF in crypto, they say Bitcoin as a store of value. They say stablecoins. There's some really good research from Nick Carter out there that they've broken out and actually being used just by everyday people and across the world. So stablecoins, Bitcoin, and I'd say DePIN personally, that has like PMF as like a category that makes sense to live throughout beyond speculation, right? I'm curious to get your thoughts on what you think would drive adoption by consumers. Is it stablecoin like payments apps? Is it maybe like DePIN networks like Helium or Dawn?
Yeah, great question. A lot of people ask us this as well, like what is a killer product of crypto? Like what is a ChatGPT or email moment? Like for example, in the internet, email onboarded 1 billion people to sort of like TCP/IP and UDP packets. Like all of that fundamental infra got essentially adoptions accelerated by things like email and commerce. So I think in the case of crypto, there's obviously a very strong product market fit with trading the long tail of assets, and not just trading on chain, which I think is great and it's getting better. It's also the asset issuance. So if you think about conventional liquid markets, like who's allowed to actually be a publicly traded instrument, right, or asset? It's actually like a very small list of people, right? In the US, you need 100 million in ARR approximately. You need to pass an audit, ideally with a Big Four auditing firm. You need to do a registration filing called an S1, and everything needs to check out. There's a very long list of requirements, and you need an advisor, an investment banker that will take you public. So if you think about the list of companies that are actually making $100 million a year and that look at the seasonality of IPO market and they say, hey, this is a good time for me to go public, that's quite a limited list. In fact, the best companies have been staying private for the past bunch of years. So I think crypto at its core is about enabling the long tail of trading of everything, not just companies. Anything that can be priced and that can trade on chain in a pair, whether that's an order book or an AMM, I think that's what crypto excels at. And I think if you look at chains like Solana today, there's a tremendous amount of new asset issuance, 30 to 40,000 tokens per day. Now, granted, a lot of those go straight to zero, but I think it's the experimentation and sort of the trading of the long tail of everything that is probably the first killer use case.
Yeah. And so why does on-chain have such a benefit to regular liquid markets in that way? Is it just the regulatory barriers that we can just do these things permissionlessly on-chain?
Yeah, it's essentially a financial system for the modern era, right? I think it's quite literally internet era financial rails. And when you think about what that means, we've been operating essentially on I'd say industrial era system for banks. I mean, obviously you have bank mobile apps and stuff like that sort of like put a new face on it. But the piping and tubing of the traditional banking system is very old and archaic. And I think this is evidenced by the fact that a wire or an ACH takes, T+1, T+2. So I think at its core, the killer product of crypto is taking settlement from T+2 days to T+200 milliseconds. Right?
Yeah.
That's not T+0. That's like T+000, right?
Yeah.
So I think that's a killer use case in and of itself.
Yes, definitely. I'd agree. And I think definitely an important piece to also highlight is the regulatory circumvention of it all. The fact that, companies are barred from doing what they'd want to do if they wanted to IPO and they're not making that much money. I think that's ridiculous, and it doesn't make any. I don't know. It doesn't make any sense to me. I think free markets work well. You should let them be free, and so that combination of updating all the piping and also making it permissionless so the free market can actually work. I think it's a really interesting combo.
I completely agree, and it's also worse for investors if you think about it, because right now, investors on the secondary public markets or even buying a primary, as soon as the IPO comes out, you're buying the founders 10,000x or 100,000x, right? For example, if you buy, say hypothetically, right, SpaceX goes public sometime in 25 and it IPOs at 750 billion and then it trades up to $1 trillion. Those are not that's not an early entry, right? Goes without saying. Now, I'm not making any sort of investment advice on this call or anything, but I would say generally what people have is a strong appetite to come in earlier and understanding that that's riskier, but they have appetite for that risk, right? And they don't want the leftovers of the market. They want to be able to go early.
So true. And the fact that we could stream capital to these founders who are pursuing really cutting edge things is really important, because that's how we're going to get innovations. We give them capital to execute, and if people want to speculate on that, that's great. There was a talk at Token 24 2049 about Spacecoin. That's a great name, first of all. I don't know did you see this one?
I didn't know.
Spacecoin. It's a DePIN for putting satellite internet. It's basically a DePIN Starlink, as far as I understood. And I just thought, that is the most crypto thing I've ever heard. It's this super far out theory that, we can all crowdfund and make this thing happen, and maybe it works. And go ahead.
I think it's great. I think DePIN in particular is another very interesting area to us, beyond just trading volumes and asset issuance, like I mentioned. I think DePIN is actually one of the most profoundly exciting innovations in how capital is raised and bootstrapped since stocks or the LLC or any sort of for example, the creation of a corporation, right? One of the first corporations was a Dutch East India Company, right? And people could buy shares in that, and they were able to essentially unlock a new well of financing that had not existed prior to that, right? And it was a competitive advantage for the company, and it allowed them to invest in ways that, they could have never accelerated their growth rate in this way. And I think if you look at infrastructure in particular, I used to be an investment banker in the infrastructure sector. The way infrastructure projects typically get financed is there's a large centralized entity that raises a bunch of equity or puts in their own money. They do some preliminary investing. For example, in the case of like an oil field, they do some exploratory drilling. They find an oil reserve. They kind of prove it up. And then once they have that sort of delineated, they go out and they raise as much debt as possible. They get permits from Department of Energy, from different like centralized decision makers, right? But I think while this is applicable in the world of like natural resources, if you look at a lot of infrastructure projects today, they're actually like technology companies, right? That are building, say, a network for people to be able to sell some of their excess internet when they go on vacation to France. They can sell their internet to their neighbors at a discount, right? So we invested in a company called Dawn that does that. But I think generally, in the same way that you're going to need new piping and tubing for trading and settlement, you're going to need it for financing and a lot of the coordination and incentivization. And a lot of people ask, like, what's the killer product of crypto? And I think the true product of crypto is actually coordination and incentive alignment. Because if you can enable shared ownership and incentive alignment through a token, in the case of DePIN, it allows you to align incentives of the operators and the users of the network with sort of the creators of the network. And it allows you to shift capital expenditures to operational expenditures. So you don't have to invest a big amount, or you don't have to go to banks or raise a bond to build out a network of like radio towers, right? You can just bootstrap it yourself. And I think that's a very profound advancement in how we fundraise and actually bootstrap these projects. And I think DePIN generally, when the sun sets on the sector, DePIN will be one of the most profound verticals to come out of this.
I 100% agree. I'm really curious to see if we get another bear market that was similarly pronounced to the last one, how DePIN networks will fare in that. I feel like they'd be kind of anti-cyclical in that way, that they would just keep chugging along. And that would be a cool like proof of PMF then, I think, that you still have these networks working even when the tokens are down and whatnot.
Yeah. And you saw it with internet companies as well, right? Like you had a big boom in the early 2000s, and then you had a bust and a lot of consolidation. And a lot of people thought this is a low interest rate phenomena. None of these things have real value, right? But from the ashes, there was a couple companies and platforms and multi-sided platforms eventually that in the post-2008 era began to produce very idiosyncratic growth that was completely different and untethered to the business cycle and to the interest rate cycle, right? And you could see traditional finance and real estate and brick and mortar retail and stuff like that, all of those things suffering and bankruptcies and very limited or negative growth. And in the same period, you had, Facebook, Amazon, Netflix, Google just popping off, right? Just rampant user growth, hundreds of millions and billions of users. And it didn't depend on interest rates. It didn't depend, obviously, low interest rates helped, right? Of course. But as far as like independent of how these companies were being valued with low interest rates, which helped their valuations, there was a lot of growth that was completely idiosyncratic. And I think we're going to see the same thing with DePIN, where, if you're a company that helps people get access to cheaper internet, like Dawn, and collapses internet costs from $120 a month to $12 a month, cutting them by 90%, that doesn't depend on the price of Bitcoin, right? People need internet like they need water and air conditioning and electricity.
Yeah, and that's one of the things I'm really excited for, because currently I'm like basically effectively 100% of my net worth is in crypto, and I'm thinking about, what am I going to do to prepare for the bear market and stuff, and what are the opportunities going to look like, and maybe there's some interesting liquid things to be done there on the DePIN side. Excuse me. I'm a little sick right now. So I'd like to pivot into a recent tweet you put out. You said, the social graph of trading on public, high-throughput blockchains will be massive. OpenLedger creates a goldmine of data and analytics, copy trading, and new strategies. One example of this is Asset Dash's Whale Watcher feature. So could you explain what the Whale Watcher feature is really quick, and then maybe expand a bit on that tweet?
Sure. So what Asset Dash has done, and just to give context, it's a portfolio tracker, but it has social and a robust data and analytics platform built on top. So it's a place at the most basic level to connect your wallet addresses and to track how the value of your various assets, tokens, NFTs, whatever coins fluctuate over time. But they have a very immersive trading suite on top of that, right? And I think taking sort of what I mentioned before, which is one of the key products of crypto is just trading and financialization, and then layering other things on top of that will be a category and will be a trend that continues in the future. And I think what Whale Watcher does uniquely is it takes notable projects, obviously holders and ownership is public, right? So you can see what the wallets are, who owns what percentage of the supply, and then tracing back those wallets that have a large degree of ownership in the projects that are best performing, and then watching them to see what trades are they making next. Basically the idea is that they have some sort of edge or informational, not advantage, but I would say informational gap or information asymmetry that helps them to generate abnormal returns in the market. And essentially democratizing that by allowing people to get notifications as soon as that information is publicly available on the blockchain. So I think it's interesting because in the same way that sort of Google built a very huge business around ads, right? Their moat is that the fact that they've indexed everything, and then they have the best analytics on spend and for advertisers. Like when Google first came out, they made most of their money from ads, and that's still true today, right? And it's that indexing and the goldmine of data that they have. And I think, if you look at Web 2, how far does the data analytics go? It's like people's email, maybe their address, maybe some browsing time, how much they spent per page, how many clicks, how many, if it resulted in a sale, conversion, etc. But if you look at crypto, the sort of goldmine of data is much deeper and it's much more profound. It's how many assets people have, how much money they have. You have where they spend their time, what communities they're part of, right? What smart contracts they interact with on a daily, weekly basis. And it's 24/7, 365, right? So I think it's kind of like in that internet example, what sort of data and analytics businesses are going to be able to be built on top of the blockchain? I think it's going to be very, very deep, and it's going to allow a more granular understanding of the consumer and the trader profile than has ever existed before.
I 100% agree with that, and that was beautifully said. That's why I really liked that tweet, and I wanted to highlight it. That made me think of another use case for this open data scheme. Imagine a world where online commerce is mostly done with stablecoins on open public blockchains. Consumers could hypothetically voluntarily share their purchase history with advertisers and then prove it via blockchain data. That could be a really big unlock for like targeted advertising that's provable, that's based on provable data, and that could maybe get a customer special perks. I'm curious if you would see something like that happening. Is it kind of along the same lines?
Yeah, definitely. I think generally, it's about consumers owning their own data and taking charge of it, right? Eventually, applications will abstract a lot of the complexities of the blockchain away, and it's likely that they keep the data. But I think just generally being able to opt in and sell your data for profit is a much better system than what exists today. Today, typically you have a user agreement that's 540 pages long. People sign it without even reading, and they sign away their lives. So, obviously there's disclosures and there's still limits to what can be collected. But I think generally allowing people to opt in and then actually receive monetary payment or consideration for their data, I think is a huge unlock in terms of people sort of taking back control of their data, especially in the age of AI, where this data is now more valuable than ever, right? Just generally for training or inference of a large language model or a small language model.
So true. Yeah, and all this like financial data is very opaque in the current system. You can't actually prove that you PayPal'd this online vendor for their Etsy page, or you sent a Wells Fargo transfer to this other person. But with the blockchain, you can actually say, yeah, look, this is the publicly known address of the vendor, and I sent them this much stablecoins for this purchase. And PayPal's stablecoin is really interesting because it has confidential transfers, and as far as I know, you can kind of reveal the data on a per case basis, but it's not open to everyone. So that kind of gives the control to the user of like, maybe then you can offer if you bought something with the PayPal stablecoin, you can offer that information up and like sell it, like you were saying, or get some kind of compensation for it.
Yeah, absolutely. I think just generally, stablecoins are another killer product like of the industry, without a doubt. I mean, you've seen entire countries like Venezuela, Turkey, even others, Argentina, that are running on stuff like USDT on Tron or Solana, right? Like you literally have essentially the wallet as a internet native checking account that's censorship resistant, and you have USDT or USDC as essentially their balance that's inflation, that's dollar denominated, dollar pegged, and a hedge to their local currency, right? So some people just hold Bitcoin. Others, just being able to have access to a digital dollar account is fantastic. I mean, especially in countries like Argentina where there's heavy capital controls. I'm not sure if you've seen it, but in Argentina, you can only withdraw like $10 a day from the ATM. So even if you have money, you can't take cash out. They're afraid of people pulling cash out of the country, and they want to control how people transact. So what ends up happening is it just accelerates crypto adoption. So any country that has a hyperinflationary currency or strong capital controls, I think, is like ground zero for crypto adoption.
Yeah, I'm really excited to see how that develops, and as an investor, how to like profit from that. I think it's an inevitability that it's going to destabilize those governments quite a bit if their economies dollarize and people don't want to hold the local currency. I have no idea what kind of second order effects that will have. I think it'll be really exciting for the people there because it gives them a great alternative. I remember I heard Andreas Antonopoulos talk about how Bitcoin was a great, feature for remittances and for government resistance in all these places like Lebanon and Turkey where they have capital controls and stuff. But I think stablecoins is a really good addition to that. You have Bitcoin, which is like no one can mess with it, and then you have stablecoins, which is like no one's probably going to mess with it, and your government can't do anything about it. But at least it's not as fluctuating as Bitcoin.
Yeah,
I think those two go really well together, and I'm excited to see what changes over the next 10 years as a lot of those unstable economies dollarize.
I completely agree. Yeah, I was just going to say there, just a quick aside. I think a lot of people try to value blockchains or look at these coins as sort of money. And I think it's helpful, like, because I see dozens of podcasts where people go on there and say like Ethereum is money, Bitcoin is money. I think it's helpful to kind of like peel the onion a little bit on like what is money and like what actually makes a good, like what makes something good money, right? And I think what it comes down to, beyond like a deflationary meme or whatever Ethereum is sort of like peddling, I think the more impactful thing is like money is a proxy for the barter system, right? So without money, it's a ledger. First of all, like I can pay you in dollars instead of trading you like a pair of shoes or 2 chickens. You know what I mean? Without money, there's a barter system. So that's the first point. And the second point is, to sort of Elon Musk's point, he had a tweet one time about money, and he said it's basically the lowest latency and most accepted currency will win. So the easiest to use, the one that's most accepted, and the one that is the fastest. It's the most frictionless, pun intended. So I think generally it's like, if you look at the market today, what does that look like? You know, it has to be short-term stable. You don't want to be waiting in line and like in the Weimar Republic in Germany. Like by the time you get to the cash register, the price of the coffee has doubled in like nominal terms, right? In real terms, obviously, it's maybe the same, right? But you don't want a price of a currency to be fluctuating like a meme coin. You want it to be short-term stable. Even if long-term the purchasing power is getting eroded slightly, that's okay. Like a little bit of inflation is necessary in a healthy economy. So I think generally through that lens of like what is money, lowest latency, the most accepted, I think stablecoins are actually fantastic money. They're short-term stable, just like the dollar. And on Solana or a high throughput network, they're very low latency, right? I talked about T plus 200 milliseconds settlement. That's low latency, and that's, for all intents and purposes, very fast. So I think a lot of people talk about Ethereum as money or Bitcoin as money. I would argue stablecoins like SPL, USDC, or USDT is a much better form of money than Bitcoin or Ethereum.
Yeah, totally. And it's interesting the fact that we have stablecoins that settle in 200 milliseconds nowadays. That leads to a world where money is so much, it has the potential to be so much higher velocity because it gets from one person to the next instantly, essentially. And I have no idea what kind of effects, what kind of second order effects happen when money becomes frictionless, pun intended. And velocity of money has an infinite cap, and it could be, it could be much more, with a much higher velocity than it is now. And it can be spent and sent from one place to the next. Do you have any idea of what you think might happen to capital markets or to like asset markets in a state where things can be priced so frequently and where money can be lent out atomically for like 200 milliseconds and brought back somewhere else for some, like, what do you think about all that?
Yeah, it's a great point, and I think that's part of like the core thesis for the high throughput blockchains, right? It's sort of like when you can do things at extremely fast latency, right? Pretty much like only bottlenecked by the limits of physics, like I mentioned. There's a famous quote by Elon Musk that says like basically physics is the only hard cap and everything else is a suggestion. So it's sort of like if you're pushing up against the speed of light through fiber around the earth, that's a hard limit, but everything else can be optimized. And I think what you look at is a financial system today. You have clearing houses and people doing settlement and doing all these different things. There's brokers doing, from one broker to another, and there's banks doing interbank lending. All that stuff and all those middlemen are going to get cut out. It's eventually going to be not just peer-to-peer, but sort of like human to machine, machine to machine, and then machine to human. And eventually just machine-to-machine communication with agents and other sort of bots trading stuff programmatically and moving value around. So what you're going to see is like 100-leg arbs starting in a pair of shoes, going into a Japanese yen, then going into commodity, then buying a house in Utah, and it's all just trading. And the resources in sort of the true economic sense, the factors of production are circulating most freely as possible. And that, I can't imagine a scenario in which that's not a net positive economic sort of outcome for society, just because the rent seekers are deadweight welfare loss, right? That's folks that are extracting value out of the system. There's leakage from the system, and they're extracting fees, but it's at a detriment, those rent seekers, typically to producers or consumers. So I think generally what you look at is a world that is, again, approximating more the internet native digital era, right? In terms of the way factors of production are circulating. You see projects being funded much more quickly and efficiently. You see loans and interest sort of accruing and getting paid out and repaid and lent out at a much higher velocity. And you're seeing a very high amount of turnover of the existing capital in the system is being allocated more efficiently. That's what it ends up looking like.
Yeah. That's a very interesting future to think about. Now, as an investor, how would you position yourself to capitalize on that if you believe that's the future?
Yeah, so pretty much how we're positioning the fund. You can expect in this world, you can expect a large increase in on-chain trading volumes. That's a core tenet of our thesis. We believe on-chain volumes are going to do 100x from here and possibly another 100x after that. And that's mainly derived from the fact that the UX of these trading applications is dramatically improved, right? Like in 2018, on-chain trading was a meme, and now it's gone from 1% of trading volumes compared to centralized exchanges and off-chain venues to around 30 to 40% on some days. And that's due to the fact that it's circumventing the sort of KYC process in a lot of cases, but it's also due to the fact that the assets and the asset issuance lives on chain. And then selectively, some of those on-chain assets are getting listed in off-chain venues. But if you just go to the source, sort of the spring where water's coming out of the ground, that's the best place to bottle and to capture the value, is to be as close as possible to the on-chain trading business. And that manifests itself on the taker side in the form of MEV and arbitrage, right? So companies like Diegeo, Flashbots are doing that. And then on the maker side, there's companies like DFlow that are optimizing the maker liquidity. So there's different ways to sort of place a bet on trading volumes. The obvious thing is to just buy the underlying coin, which is the gas fee. But then there's more sophisticated bets around parsing apart, okay, in a world where instead of $2 billion a day index volumes on Solana, you have 200 or 300 billion a day, right? You have trillions a week instead of trillions a year. What does that world look like, and where does the value accrue in the value chain in sort of that massive trading sort of scheme? And I think honestly, you don't really have to be that much of a hero. You just have to look at TradFi. Where does the value accrue in TradFi? Generally, it's price, oracles, and signaling, and the signaling function of price, as well as execution. So having marginally better prices or marginally better execution allows high-frequency trading firms to reap the vast majority of the profits and the abnormal gains, right? This is why folks make massive investments in FPGAs and hardware and write just marginally better code to be able to have like eke a small performance advantage in the markets on the execution side. And then same thing with the price. Having access to the most fresh and the most low latency price quotes is absolutely essential.
I think this leads perfectly into the next question I have, which is, given that the value accrues to the people who have the freshest prices and can do those high frequency trading arbs, what importance do you place on atomic composability? Do you think that many ETH L2s combined with the interoperability protocol can perform as well as a single atomic state machine like Solana or Sui?
It's a great question. Like, I'm really glad you asked it, because I think this question actually hits the heart of why a single atomic global state machine is actually not just nice to have, but actually a requirement. So generally there's two types of communication, and I'll talk about in a world where there's many ledgers, and then I'll talk about a world where there's one ledger. So there's two types of communication. You have one-to-many, and you have all-to-all. So in one-to-many, I'm broadcasting to other folks, but it's not necessarily a real-time guarantee that everyone has the same information. So some things are like not required to be synchronized in the same second, right? I don't need every single node to have the same information. There's a lot of applications that I can think of that are like that. But in the case of trading, price is like a great example of something where you want everyone to have the same price. You don't want a trader in Japan to have a different price from a trader in New York. And unfortunately, we live in a world where even in traditional finance, there's multiple ledgers, right? There's multiple stock trading venues, right? You've got New York Stock Exchange, you've got London Stock Exchange, Tokyo, all these different venues, right? And what that creates is, you know, in a world where there's different ledgers, there's latency and there's price discrepancies between those venues on the same asset. So like there's this thing in finance called the law of one price. And when a single asset is trading, a financially equivalent asset is trading at different prices, there's a violation of the law of one price, and there's an opportunity for riskless arbitrage. So this is why there's people arbing, you know, FX pairs, equities, you know, all kinds of instruments, right? Public debt products, everything is getting arbed in like sub-millisecond transactions, right? So it's basically like in a world where you have today multiple ledgers, if you have layer twos or if you have multiple ledgers, you have EVM, Ethereum mainnet, you've got Arbitrum, you've got Base, you've got Optimism. You're just essentially recreating what already exists today with multiple ledgers around the world with exchanges. But it's going to be worse because instead of having millisecond or nanosecond sort of settlement on New York Stock Exchange, you're going to have T plus 11 seconds on Ethereum. So it's like, who wants NASDAQ but 1,000x slower? No one wants that, right? For serious like high value, high economic value stuff, you're not going to use that, right? So it's sort of like, why would you recreate what already exists in TradFi but strictly worse? I don't think there's any point in that. It's not a new approach, and it's just a basic like adage, right? Same approach, same results, different approach, different results. So I think what's most exciting about crypto is that people are trying new things, and they're trying to have one ledger where actually the vast majority of execution and settlement for a lot of economic activities and eventually a lot of the world's economic value ends up coalescing on one ledger. I think that's a strictly better system, because what that creates is a situation where you have one to many, and you have those price guarantees where any single node on the network, there's an on-chain verifiable proof that everyone has access to the same information. So you don't have that sort of unlevel playing field like you do in TradFi, where one HFT firm has an informational edge relative to you, a trader in your house. And sure, like you can take directional bets, and sometimes you'll be right, they'll be wrong, but all else equal, you're going to end up losing over time, right? Because you have worse information, or information asymmetry exists. So I think it's more just like, what world do we want to live in? Do we want to live in a world where we're recreating multiple ledgers similar to the stock exchanges all over the world with a network of layer 2s with latency and arbitrage between them? Or do we want to create, or try to create, a global state machine where everything is synchronized? There's atomicity, right? And you can actually try to attract as many businesses and traders and individuals or agents or whatever it is in the future onto that, and then sort of test the limits of that system, which have not been done yet.
Yeah, well said. I'm really excited to see where the limits of that are, because a lot of people have said, oh, you need L2s and you need multi-chains because it can't all fit on one chain. And I'm like, that sounds like a big assumption. You don't know that. I don't think anyone knows that, because no one knows what the breakout apps will, what things will be tokenized, how much trading will actually want to be on chain.
Yeah.
I think it makes a lot of sense to try and build the biggest ledger possible. And even if it's an L2 or an L1, like it doesn't matter to me. It just all needs to be on the same atomic ledger. Like if it's on Sol or if it's on Mega ETH, I don't care. It just needs to all be in the same place so that it can have like capital efficiency and that atomic like capability, and that no one wants to like bridge between everything, and it's easier for developers to build on top of. There's like so many benefits to everything being on the same ledger. And I'm curious how you view the ledgers, like the ledger space. So if you take L1s, L2s, and you look at all of them, like which ones look the most promising to you? Because Sui has an interesting like object-oriented programming model. That's cool to me. There's some unique things there. And Solana has the biggest community and the biggest like single state that everyone wants to touch at the moment. And then like Mega ETH, I don't really know too much about them, but it sounds like they have potential to put a lot of stuff on there. Same with Monad. And I'm curious, like, how do you view the landscape of different ledgers at the moment?
Yeah, it's a great question. And I think generally, like, I would take the conversation around layer 1s and layer 2s just head on. And if you're serious about getting adoption to these blockchain systems, and you want this industry to move past like the low millions where we are today to like the billions of people actually interacting with on-chain applications and signing transactions with their private keys, whether that's through applications or manually with their wallet or whatever, the way we get there is by scaling these systems. You have to process hundreds of thousands or millions of transactions per second. That's what was required for the internet to attract these better applications and to allow them to get built. And if you're talking about scaling, and if you're serious about scaling, you have to scale on the layer 1. The conversation around blockchain scalability starts on the layer 1. Only when you've pushed the layer 1 to the limits of physics, like I mentioned before. Physics is a hard requirement, and it's a sort of a hard limit. Everything else is a suggestion. So unless you're butting up against the limits of physics on the layer 1, you don't need to turn to a layer 2 solution until you've maxed out the layer 1 scalability. So the fact that Ethereum, relatively early in its life cycle, right, in the grand scheme of things, has to pursue a roll-up centric scalability roadmap, that doesn't mean other systems have to do it, right? And I think this conversation around layer 2 sort of peaked in 22 and 23, but people are now realizing they come with some massive trade-offs, and it's more or less a Faustian bargain of giving up composability, fragmenting liquidity, and increased user complexity as well as developer complexity in exchange for some sort of capacity increases and maybe some fee isolation in the case of layer 3s and maybe some like cheaper gas fees, but there's huge trade-offs. So when we look at the landscape today, I'd sort of like use that as a sort of like intro to say we're focused on layer 1s because we don't believe layer 2s are fundamentally necessary yet. At least not for scaling. Now, if there's a very strong reason for an application to use a layer 2, and there's a very distinct use case that's uniquely enabled by using a layer 2, then that's a different conversation. That's something we're always open to, but it has to be something that's extremely compelling and I wouldn't say obvious, but they have to make a very strong case as to why they're doing that. So to answer your question directly, I think Solana has a very strong approach. I mean, they are the ones that essentially took this path a couple years before anyone else and have been extremely focused on that North Star of like increasing throughput and lowering latency. And you've seen Totally banging on this drum for years and years, like even from the white paper until now. Basically hasn't deviated in his vision. And I think that cohesiveness around developers and different folks around the ecosystem, core developers, application engineers, everyone sort of like aligning behind that North Star is incredibly powerful. But since then, you've seen other blockchains come out. I think Aptos is pursuing some very interesting stuff. They're doing multiple concurrent proposers. They call it pipelining, right? They've got a lot of different things that they're doing that are interesting, as well as Sui. So Sui has a dual fast path. Like there's a lot of cool stuff there. I think these are different flavors of the same system that Solana is building, but just generally, we're extremely bullish on any system that is doing high throughput and fast blocks, big blocks, and they're doing it in a massively parallelized way. And I think generally that's going to be the approach that onboards the most developers and users, and it's going to be also the approach that actually results in the best applications, which is like kind of why we're on this podcast, right? Like if it's not for better applications that make a billion people's lives easier, then why are we here? It's just hyper gambling without that.
Yeah, well said. I think that is a pretty good place to put a pin in the infrastructure conversation because it is one that I don't want to get like too much deeper in because I think it's been talked about for so long now, and I think a lot of people are kind of like more. I think a lot of the interest is on apps these days. Like people are really just want to see, okay, now that we got these cool high throughput chains, what can we do with them? And on that note, you're a big gamer. I always see things about Web3 gaming and this Web3 game's coming out and this one's getting a lot of users. But I always think no one ever wanted a pay-to-win game. So I never understood, where that intersection of Web3 and gaming happens. But I feel like it's somewhere. I just haven't seen a good implementation of it yet. And as a fellow gamer, I'm curious to get your take on where you see the Web3 gaming space at.
Yeah, I think I wrote an article about it actually on our website. It's at frictionless.fund. I think at this point in the journey, crypto needs gaming a lot more than gaming needs crypto. And I think a lot of these ledgers, again, they're good for asset transfers. They're good for publicly verifiable activities, right? Where everyone in the user base needs to know when something happens. It excels at that, right? Like, for example, an achievement. But do these things need to be on chain? That's the question. I think they only need to be on chain to the extent that it results in a better product. And it's not, we have this saying at Frictionless, which my co-founder Logan came up with, which is like, it's not better crypto products. It's better products, period. They have to be better than Web 2 alternatives. And if you look at the gaming sphere and the gaming sort of landscape today, the best games in the world are titles like Valorant, League of Legends, Dota, Call of Duty, different categories, right? And it's like, whether it's a first-person shooter or it's a RPG or whatever, these games are so fun that people play them for 10 hours a day, go to sleep at night, watch another 3 hours of YouTube in bed about the same game, wake up the next day and do it again. Like there's not a single game I'd seen in Web3 that is that fun. To the extent that sometimes they attract farmers, not gamers. Like for example, in Axie, there was a huge player base when the rewards were massive, and then as soon as the rewards went away, so did the player base. So I think to answer your question, like what is the most promising title? Like probably GTA 6 when they have a token integrated and there's a crypto element to the game, which they've already said is going to happen, right? So people have said like, what's the metaverse? When is it coming? And you can say like on the hardware side, you need like 8K at 130 frames per second in a headset. That's still a couple of years away from happening. But you also just need a game that's really fun. GTA 5 was one of the most successful games of all time, primarily because it was really fun. So it's kind of a stupid answer, but like the games aren't fun, and this is why we haven't seen a breakout game. But not saying that's not going to happen. I just think people overestimate how much of this stuff needs to be on chain versus just off chain.
Yeah, I 100% agree with that. Is it just needs a fun game, but then where does crypto fit into that? I was researching that, and Steam takes so the Steam store, people will trade like CSGO skins, for example, and the Steam store takes like a 5% cut, and the CSGO devs get like the other 10%, and then the remaining 85% just goes to the recipient of the trade, right? So there's not that huge of a fee that Steam's actually taking for the service they're giving. I mean, they have the best distribution of gamers, and they're like the front page of every gamer's place. So 5% on that seems reasonable. But then I realized there's a big black market for skins. So you can actually send CSGO skins outside of the Steam marketplace, so that Steam doesn't get a cut, the devs don't get a cut, and the consumer avoids those fees, but also could get scammed in the meantime. And I thought that's actually maybe the one place where NFTs make sense, because then you can enforce some kind of rules. Like if it was a sweet NFT, they could make there be a royalty for it to be able to be transferred in the first place, and like you couldn't transfer it out without the royalty. And I felt like that was a little bit reaching, but like maybe that's the one way I see it being implemented. But on the asset side is, I guess, the point I'm trying to make, is it has something to do with the assets in the game. Yeah,
it's assets and it's trading again, right? Like we're coming back to the discussion on like financialization and the trading of like the long tail of assets. So I think like to the extent that you can internalize a gray market, like what you mentioned of a gray market appearing outside of the Steam store, and then internalize that into the system where there's less leakage and there's no incentive to take assets outside of sort of the marketplace or whatever, I think that's good. I think the other area where it can help potentially is infrastructure, and for game developers, if you're an indie game dev, not having to build a marketplace and having access to like serverless tech that just runs on RPC nodes that you can just plug into a blockchain, and you have your backend infrastructure essentially solved, or that piece of the equation of at least the development. As far as infrastructure is concerned, having that be permissionless and public can have some big advantages. If you're building a game that you want to have global scale, perhaps it's better to just be a completely public financial infrastructure that it runs on. If transactions and asset based transacting on ledgers is a big part of your game and a core experience like a trading game, this makes a lot of sense, right? If your game is just purely non-financial, and it has a user journey that doesn't ever touch assets or asset creation or trading, I think it makes a lot less sense.
Yeah, I agree a lot with that. I think for that kind of an infrastructure, for a dev to get benefit out of it, it would be best if it was on an atomically composable layer of some kind.
Yeah.
Because I was thinking about this, like if you really like to farm gold in WoW, but you didn't like to grind levels on RuneScape, you could maybe atomically say like, hey, I'll give you 1k WoW gold if you grind me 10 levels on this RuneScape skill. And that would be best done on an asset ledger, because you could, hypothetically tokenize things from different games and trade them.
Yeah.
Which you couldn't do if they were like all their own app chains and they're all little isolated.
Correct. You'd have to bridge them, and someone would have to assume the risk of like the interoperability there, right? So it's about breaking down these barriers and these silos, connecting these silos as opposed to creating more silos, in my opinion. Like, again, we don't want to recreate the fragmented, opaque system that exists in the real world. We want to build a new financial system. And I think that's really the promise of crypto. And to your point, like, I think a lot of applications, I think, are uniquely enabled by this. And it's really those 0 to 1 applications that are most interesting to us. Like, if it's recreating what exists in Web 2, it's sort of like a robotic horse when like cars exist. Like, do we need like a decentralized Twitter? Like, maybe. Can you incorporate Twitter element or like crypto elements into Twitter? Like, probably, right? So it's like, again, the question, the fundamental question that we always ask ourselves is like, does this result in a better product? Or is this sort of like creating a problem for then crypto to solve it?
It's a great question to always ask, because there's so much like vaporware. People just want to make money in this industry. It makes sense. But you got to be vigilant.
And the token can't be the product either, right? Like the token, to my point on DePIN, like token is ultimately a means of coordination and incentive alignment. The token is not the product. And we talk to a lot of teams, and I'm sure you've seen a lot of folks in the industry where the token is the product. Like, you can totally tell.
Yeah, and they don't want to say it. And that makes me think, like, it's hard to walk the line between being skeptical of everything in crypto and then also being optimistic, because, you know, like 7 years ago in 2017, I was like, oh my god, this is awesome. Like, yes, I'm going to buy all this coin. This coin totally makes sense. And it's all vaporware. And then to, like, reel it in and say, you know, not to call everything bullshit, but to, like, you have to basically start with the assumption everything's bullshit and then really try and convince yourself otherwise. How's that journey been for you? Like, trying to walk that line.
It's a great question, and it's something, like, honestly goes back to infrastructure. Like, you have to understand the stack and the ground upon which these products are built. If you don't understand how Solana functions or another high throughput blockchain, what's the nuance and what are the unique capabilities of each one of these systems, you're not going to understand how a talented product or application engineer or protocol designer will uniquely leverage those advantages to create a best-in-class product, right? So that's the lens through which we view the space, is through the lens of infrastructure and high throughput. But then it then goes into a question and a discussion around which market are you attacking, right? And I think a lot of VCs, they focus on products or they focus on people. That's fine. But we don't believe that's a correct approach. We believe in looking at markets. So you have to actually underwrite the market. What problem is the founder solving is fundamentally like a crucial question. Because the bigger that problem is, and the more people it touches and the more sort of high stakes it is, the greater the prize for solving it, right? And I think like the classic example which I give is like kind of like a joke, right? Like, do you want to be the best in the world at like secondhand umbrella sales? Like, how large is the market? Terrible, right? Terrible example. Like, it's not even funny. But it's like, you know, a lot of these big problems around, like, for example, who's enabling cost competitive inference tokens for large language models for like Llama or another open source LLM, right? This is a multi-billion dollar, like $100+ billion market, and it's a problem of like people need access to cheap inference that's reasonably priced, and the demand for that is kind of like the demand for a barrel of oil. Like, if you can produce a barrel of oil at a competitive price, there will be a buyer at that prevailing price. And it's sort of like these big, larger, overarching problems that exist today. Who's solving those? So we start in the markets and then we work our way back, as opposed to just like, you hear a lot of VCs that are not technical that will just say, we invest in people. That's fine, but even the most talented founder attacking the wrong market is unlikely to actually produce a venture scale outcome or return that's actually like really good. You know, so it's like product, founder, market. And we're market first. Like, you have to be investing in the right markets consistently. And obviously, if you have a killer product and a good founder, that helps, right? I do believe in founder market fit. Like, people that are able to pivot, even if they're initially not correct, they're able to like right the ship and then take a different course and then figure it out. I think that's a great skill in a founder. Founders that don't give up, founders that are persistent, founders that don't take no for an answer. That's great, but it's not a reason to invest in and of itself. It has to be the right market.
I love that market-driven approach, and that's what makes me so excited about stablecoins and DePIN, because both of them, I'm like, oh, there's a huge market for both of those, and DePIN depends on the thing.
100%.
Like that's why your investment, I think that can shine a light on your investment thesis for Dawn, because everyone uses the internet. Like you said, it's like water, and they have this huge margin to attack. So like, there's your market. It's obvious, right?
Yes.
It's clear. I'm so excited to speak with Neil some more. I met him at Permissionless in Utah, and that was
nice.
like really cool to see him after I saw him on Logan's podcast first.
Yeah, and it's like a really easy answer. Like, why are you investing in Dawn? Well, the simple answer is it's a $100 billion market for home internet, and Dawn is collapsing the cost of home internet by 90%.
Simple. I love it.
Simple. The best things in life are simple. You know, if you can't explain it in 15 seconds or less, either they're trying to sell you snake oil, or they haven't done enough thinking about it.
I love that. So I have 2 sections left. One, I would be curious if you painted me a picture 5 years from now, if we had 5 crypto apps that each 1 billion people use, whether they know they're using a crypto app or not. You have 5 apps that all have 1 billion plus users. What might those look like? And then also, what did the blockchains beneath them look like? You could just do one example or 2, up to you.
Maybe I'll go for all 5. Okay, so it's a great question. And I think this question, in the way it's phrased, it really touches on a key point, which is that apps will abstract away a lot of these things which we think are products today. They'll bundle them in. So in the same way that in the Facebook era, Facebook unbundled like a social feed and messaging, and then they unbundled image sharing and Instagram, right? And then they unbundled like WhatsApp, or they acquired them, right, to attack these different things. The core product was a social graph, and that's what unites all those different things. But in the Facebook era, there was an unbundling. And I think in crypto, there's going to be a bundling. It's going to be the other way around. We have these like random companies like wallets. You have trading venues like clubs and AMMs. You have, places to generate assets like pump.fun. And these are not really actually products if you think about it. In the end state, they're all features. And I'll give an example. I'll give the example of STEPN. STEPN was an app you could download on your phone that had a wallet. It had a DEX to trade sneakers, or a marketplace to trade sneakers and the tokens and the swap. It also had a seamless like UX to do the walking and all that stuff. So in STEPN had a lot of wallets, but it wasn't a wallet company. And it had a lot of trading volume. At one point, more trading volume on NFTs than Magic Eden. And it had a lot of swaps, but it wasn't a trading app, and it wasn't an NFT marketplace. It was just a super app. So the apps I'm going to talk about are going to be bundles of things that we consider products today, but I think are actually just features today. People just haven't realized it. So a killer product is going to be something that has a really good on-ramp and off-ramp integrated, whether it's their own or they're using someone else's. It's going to have a way to trade assets and do swaps atomically right there on the platform. It's going to have some sort of unique user experience, something that's uniquely enabled. Like, for example, when the GPS was added to a phone, you could do things like Uber, right? Or when you put a camera on a smartphone, you could do Instagram. So it's going to have some unique user journey and loop that doesn't exist on the market today, which makes people's lives like 5% easier. So through that lens, I think we're going to see a trading application, which will be the everything app. It will be every single asset in the world, whether they're tokenized or they're non-tokenized. It's going to be a place to custody your assets. It's going to be a place to discover new assets. It's going to be a place to trade them, obviously, spot, leverage, anything, 24/7, 365, everything app. And it's also going to be financialized in the extent that it's going to be a place to receive your paychecks. It's going to be a place to get paid, and it's going to be a place to pay people. And if I had to predict what app is going to do that, I think Backpack is going to do it. Now, full disclosure, we're an investor, but that's the world they're building for. So think of like Robinhood plus JP Morgan plus everything, like a lot of the on-chain stuff that you see today, right? So that's sort of like Backpack to everything app. That's one. The next category, I think that it will definitely happen, is going to be a DePIN network that's on your phone, or a multi-sided platform that aggregates DePIN networks and allows people to seamlessly interact with hundreds or thousands of DePIN networks at the same time. So multimodal inputs, whether that's your data, your browsing data, your spending patterns, your biometrics, whatever. You can have hardware devices, right? I'm wearing an Oura Ring. All these things are tethered to your phone, and it's feeding it into this DePIN multi-sided platform, and then it's a marketplace for data. And all kinds of DePIN networks are paying for data. You're getting paid in crypto assets, and those are getting settled into cash, and they're getting transferred probably into your backpack, right? So that's the second app. Third, I think there's going to be games with global reach, specifically mobile games, that have the popularity of a Dota or a League of Legends with 20, 30, 40, 50 million daily active users, right? That are literally played by 1 billion people every month, and that are skill-based, and people will be able to earn a living just from playing this game sustainably with a sustainable token economy, not like a super inflationary tokenomics that just goes to zero. So that's the third category. And then the fourth and fifth, I'd have to think about a little bit more, because payments and all these other things will be bundled into something like Backpack. It would be one financial app to manage. You don't need 4 apps. Ideally, it's all in one. So I'd have to think about the fourth and the fifth, but I think it would be something around social. Probably. People love social apps. X, Instagram, these are consistently the most used apps. Snapchat in some parts of the world, like Saudi Arabia. Like, these are consistently some of the most used apps and the most engaging loops for user engagement and retention. So social is a really good app that sort of like anchors a lot of other stuff, right? So maybe it's X, the everything app that Elon alluded to, but the experience would be anchored by social. So something like him acquiring Twitter is very significant from like if he wants to add, a ride-sharing app for autonomous vehicles on top, plus commerce, plus payments, plus all these things. Like social is a really good anchor. So the fourth would probably be a social app, and then the fifth I'll leave as a wild card, some sort of vertical that just doesn't exist yet that we haven't even thought of.
Like a Tinder, where you can't see it coming until the iPhone.
Yeah, you can't see it coming. Some sort of like 100x jump in a way of doing things that no one could have predicted, but it just seems obvious once you see it.
Man, I love those answers. Those are fun, and they make a lot of sense to me. I think they're well articulated. Now I just have some rapid-fire questions that I'd like to just get, a quick 1 or 2 sentence answer to, and then we can wrap up and call it a day.
Sure.
Cool. So how much time do you spend on Twitter every day these days?
These days, probably a little bit less, probably like 2 or 3 hours a day. So that's quite a lot.
Still, yeah.
It's like still like 30 or 40% of my waking hours. But I spend a lot of time talking to founders, obviously, and a lot of reading, a lot of writing, a lot of just like, I would say, thoughts, ingesting information, articulating information, but a lot of time talking with founders, obviously.
Nice. Where do you spend most of your time outside of work?
Honestly, I don't go out as much as I would like, as much as I would like to. I mean, I just like tell people I found the job that doesn't feel like work.
Yeah.
So the days go by, and there's, hand on my heart, nothing I'd rather be doing. And honestly, I mean, I go for a walk every day. Sometimes I go to the gym, but I mean, for all the memes about touching grass, I don't touch grass that often.
Nice. I like that answer. I'm glad you could find something you love to do. It's a real blessing that you get to.
It's such a competitive space too. I feel like if you actually want to be one of the best funds or asset managers or allocators, like you're going up against people that play this game for fun. Like they would literally do this game for free. And that's how much fun and how engaging they find it. So it's like a lot of people ask us like, what's your job as an investor? And fundamentally, we're seekers of truth. We seek to find the truth in the market before other people see it as truth. When there's discrepancies in people's understanding of projects, or they don't estimate the value of a market, or they don't understand the value chain of where value is going to accrue, and you can play that game and you can solve and you can find that truth weeks, months, or even years before other people, that's how you generate alpha, and that's how you generate returns that are orthogonal to like market beta, right? So it's like, it's a challenge every day. I sort of like compare this to like MMOs, like hunting for some ARB or some trade on the auction house in an MMO. This is the same thing. Like we're trying to find value where people don't see it. because if everyone sees the value, by definition, there is no value, or at least not excess returns.
Right, and that's so much fun. I feel like the great example is the great Solana trade. Like, if you held a bunch of Solana from the bear to now, it's because you saw something that other people didn't, and now you are rewarded with a lot of money, but you're just so right. And all these ETH maxis were dunking on us for so long. That's it. So I see like the fun in that. To me, that's super fun.
Yeah, and also being publicly right. You have to write about it, right? Yeah. If you don't write your thoughts, then anyone can say they were bullish on Solana at the bottom. But how many people wrote an article when it was $12 or $13 outlining the entire thesis? Like, we wrote that piece, and at the time, I can tell you with my hand on my heart, there was only a very small handful of funds that were publicly bullish on Solana at the bottom. In December of 22, there was less than 5 funds in the entire industry that were willing to die on that hill, right? Yeah. And some of them had billions of dollars of Solana. So, I mean, they kind of were like riding this boat for better or for worse, right? But generally, there's very sophisticated investors that were able to see it, and you have to write about it, and you have to be publicly right about it in order to really make a name for yourself. And I think it's that concentration, and especially that conviction, that separates sort of like the okay funds from like the excellent funds.
That's the biggest motivation so far that I've had to write on Twitter. Now that you mention it, is that like looking back, I go back to my tweets and I didn't tweet much in that time. I was just lurking. I had one post where I was like, "Yes, I'm DCing," so I have proof that I was buying. But I will definitely like to tweet more and say when I'm doing something contrarian, so that I can go back and hopefully be right.
That's great. Now, yeah, I mean it's key.
Yeah, what's your favorite Solana meme coin that came after Bonk? I have a feeling you might say Bonk.
Man, it's a good question. Honestly, I'm not a big meme coin trader. My friends are the ones who started Bonk. So the funny story is like a lot of my friends from Monkey DAO, several of the co-founders were actually co-founders of Bonk. So from that one group of like 8 people, we helped create the NFT culture in 2021, which was like, tens of billions of dollars of NFTs were traded. And now it's arguable that Bonk started the NFT meme coin culture, or so rather the meme coin culture on Solana. So from the same group of people, we sort of like moved the needle twice for the network. But to answer your question, like honestly, I'd be pretty hard pressed to give an example. I think like, I'm gonna get like roasted.
Did it make you laugh? Like, did you genuinely laugh at any of them yet?
Yeah, definitely. I think there's some good potential around. I like some of the coins that are not just like cats and dogs. They're more like people or represent a movement that's a little bit more broad. I think that's like the next iteration of memes is like character coins and things that represent an ideology or a political movement. I like some of those memes more than just like a funny cat or dog. Nice. I think the cat or dog is like the dancing baby in like AOL moment. It's kind of like funny and it's an internet native meme that everyone like thinks is funny. But I think quickly we'll go past this and there will be like culture coins that are adopted by like half of the world's population.
What's your favorite sport or way to get exercise and move your body?
Favorite sport to watch, definitely soccer. I mean, I grew up in Spain, so I'm from Spain originally, so I definitely grew up watching and playing soccer. I mean, it's like a religion there. To play, probably at this point, like running or some sort of like weightlifting or cardio. It's the only thing I have time to do. I don't really like do any team sports. Nice. But I think of the fun as like a sports team. We think of ourselves as a sports team. It's a high performance environment, and it's something that we need to win. Like we're not just playing this game for like to see how it goes. Like we're trying to actually be the best fun.
That's awesome. I think that's a great place to end it. Diego, I wish you the best of luck in winning. I think you will go far. And it's been a blast to talk to you. Thank you so much for coming on. And then what's the best way for everyone to keep up with you and your fund, Frictionless?
Yeah, so you can follow me at Solana Legend, at Solana Legend on Twitter. And you can read more about our thesis and some of the sort of blog posts and more long-form research pieces that we've published in the past at frictionless.fund. My co-founder Logan also has a very good podcast. He does technical deep dives with the most brilliant developers and engineers in the space and top asset allocators as well from other funds. But what I love about Logan's podcast is that he takes very complex concepts and explains them simply. So they're accessible. You don't need 2 master's degrees or a PhD to understand what they're talking about. It's powerful tech explained simply.
I will definitely second that. Go check out Logan's podcast. It's been a big inspiration for me, and I came at it with no technical knowledge about blockchains, or very little, and just over time listening to Logan, I have learned the language, and it's been an absolute blessing. So thank you, Diego. I hope you have a great rest of your night.
Thank you. Thanks for having me on, Nicholas.
Great.